The global dairy sector has entered a new phase of trade disruption after China imposed new tariffs on European imports. Experts say it could reshape export flows and intensify the search for alternate export markets. Beijing will collect duties up to 42.7% on select dairy products from the European Union. It includes milk, cream and high-value cheese. The move is widely seen as retaliation for the EU's earlier decision to levy tariffs on Chinese EVs. For European dairy exporters, the impact is immediate. China has been one of the world's largest dairy importers, particularly for premium and specialty products. Higher tariffs sharply erode price competitiveness. It forces EU producers to reassess volumes, margins, and long-term market strategy. With domestic demand in Europe already mature and growth limited, the loss of momentum in China adds pressure across the value chain. This raises a key question: where can the EU find markets of comparable size and scale? Attention inevitably turns to large consumption-driven economies in Asia. And on paper, India stands out. It is the world's largest milk producer. It also has a vast consumer base and a growing middle class, which could absorb higher value dairy products in practice. However, India remains firmly closed. Commerce and Industry Minister Piyush Goyal has reiterated that India will never open up its dairy sector under free trade agreements, citing the livelihoods of millions of small farmers. For now, India's role is limited to processing dairy inputs strictly for re-export, not domestic consumption, leaving EU exporters with few easy substitutes for the Chinese market.